Hey traders, Jason here from Levitt Brothers. So in this video, I'm going to talk about the current market breadth. I'm going to talk about stocks at a 1-month high low, 3-month high low, 52-week high low, and then stocks above their 20, 15, 200-day moving averages. And then I'm going to look quickly at the advanced decline line. I'm going to warn you ahead of time that I don't have any really strong conclusive conclusions from this. Okay, normally the market is doing really well, or it's doing poorly, or it's doing well but there's warnings, or it's doing poorly but there are signs that it's strengthening. There's something there that tells you either to keep going or to let off the gas or maybe press on the brakes or look to go reverse. But right now we have a lot of neutral readings that aren't really strong in either direction. Okay, and so to me, I mean that's fine. You're not always going to get a conclusive opinion from looking at something. Sometimes you can step back and say, I'm not really sure what the charts are trying to tell me. Okay, that by itself is, if that's what the market is telling us, then that's what the market is telling us. You can't force it to be something different than it is. All right, so let's get into this and you'll see what I'm talking about. So here is this is the S&P 500 in blue, and every chart I show you, the S&P 500 is in blue up top, and then the indicators down below. And in this case, we have the 1-month high-low overall. So of all the stocks out there, all the operating companies out there, these are the stocks hitting 1-month highs versus 1-month lows. And you can see over the last month or so, we've just had very muted readings, a little bit above zero, but not too much above zero, and it's been flat. Okay, so if we go back to, say, June, July of last year when the S&P was going up and up and up, you had a lot higher readings here. Okay, and then when the market trended down, you had all these readings below zero, and then the market recovered from there, and you had lots of readings not only above zero, but well above zero. You had some high prints here, there's 2 high prints there, 2 there, there's 1 there, there's 1 there. You get decent prints, and then you occasionally get a little spurt, and then we get a little pullback here, and then we got a recovery from the pullback. But you think, if the market was trending up here, we got some really good prints, then it went flat. So we got some down prints, and now we've had this steady uptrend, but instead of we don't have any prints up here. There's been no sudden surges. Everything has been very, very muted. So we have consistent prints above zero, but not very high prints above zero. It's more, it's not neutral. It leans up, but it's just not a really strong lean. It's almost like the rotation that's going on is perfect, because we know that there have been a lot of stocks that have fallen off. We know that there's been a lot of huge gap downs on earnings, and these stocks certainly are at 1-month lows instead of 1-month highs. And it seems like for every one of those that happens, there's an equal and opposite one to counter it. Okay, so instead of the indicator moving up or down, there's this perfect rotation from one stock to another, and the market just kind of keeps churning, which doesn't happen often. All right, same indicator, except this time we're using the 3-month high-low. Pretty much the same situation. Here we have steadily increasing prices, little divergence here at the end. Then we have, obviously, market fell, and we have declining numbers. And then at the end here, we have positive divergence that tells us this down move here was less bad than this down move, because this print here was able to hold the bottom there. Then we get some improvement. We get some solid prints here as the market kind of achieves escape velocity. And then we've basically just been drifting since. Again, there's this perfect handoff from one stock doing well and then one stock falling off, and then another stock falls off, but it's okay because there's another stock to take its place. And instead of this indicator trending up or trending down and giving us some sort of clear signal, it's been moving sideways for 2 entire months. So it almost mathematically it's perfectly fine. Okay, if there's X number of stocks, X number of more stocks at a 3-month high than a 3-month low, then the market can certainly continue to trend higher. But there's been this perfect rotation that every single time a new stock hits a 3-month high, there's an equal and opposite stock that hits a 3-month low. So the indicator just doesn't really change much. Mathematically, that's very possible. It just doesn't seem very likely to play out in real time, which is exactly what has happened. Okay, same indicator. This is 52-week high-low. This one is a little bit more supportive. Okay, we got trend up here, some higher prints, trend down, trend up here, and you could see that most of our prints here are above zero, and we actually have some decent prints. Whoops. Didn't mean to do that. We actually have some decent prints at a high level. We're moving sideways like the last two indicators, but at least we're not like moving sideways at a really low level just above zero. So this is actually pretty good. So certainly supportive. If you did not have access to this, but I told you like draw the S&P 500 based on what this indicator is, you'd probably draw it similar to what we have here, because for the last 4 or 5 months we've had steady prints above zero for 52-week highs, and if that's the case, the market is going to move up. All right, here we have a Russell 3000 stocks above the 20-day moving average. Okay, so not a really, it's a really good 20-day moving average, a really good intermediate term moving average. Like the 5 is probably too short, 50, 150, 200, get a little bit long. 20 is a really good middle of the road to tell us what's been going on, in the near, what's been going on like over the last month or so. So, and similar to the last few, we have very muted readings here. Okay, this is just sideways movement for the last month. Got some down prints over here, but for the most part, we have, last 4 or 5 weeks, we just have sideways movement. Whereas typically you get free-flowing action. We get some highs as the market spurts lower. We get some lows as it falls off or weakens for a week or so, and then it gets high, and then you over here the market moved down, so you get like free-flowing movement below a key level, and then the market improves, so we get like steadily improving numbers, and then it moves down here, and like all this is normal. But now I'm going to get rid of that. Now we've just kind of settled into a range. We don't really have any free-flowing movement since the beginning of the year. We have no prints up to 80%. In fact, we don't even have really any prints at 70%. So somehow, some way, the market has done this, and for every stock that gets above its 20-day moving average, a stock loses its 20-day moving average, and there's this perfect handoff of the baton from one to another, and the stock in the market just kind of steadily moves up as it has. And again, mathematically it works, but you just don't expect it to play out in practice. For you to have that like an equal and opposite stocks moving, to have equal stocks moving in opposite directions, just doesn't seem to be normal. All right, this is number of stocks above 50-day moving average. Again, steadily improving, steadily weakening, steadily improving, steadily weakening. All that is normal stuff as the market goes up, market goes down, market goes up. Get a little rest over here. But now market continues to go up. S&P is up, another, probably 500 points over that point, over this period, from 4,700 to like 5,200 over here. And all we've gotten here was just like flat trading here. The same number of stocks are basically trading above their 50-day moving average, and every time one goes above, a different one goes below. There's a perfect handoff of the baton, and the market keeps going and going. I don't know how to read this. I don't know why or how it's like this. It almost doesn't make sense because it's too perfect. If I could draw a line right in the middle here, this is your 50% line. Okay, so you just have basically 50 to 60% of stocks above this moving average, and the market just keeps going and going and going. Zero high prints whatsoever. I don't know. It seems too perfect to me. Here is same indicator, same type of thing, but now we're using 200-day moving average, so we're backing up a little bit. This makes more sense. Okay, 200-day moving average is a much it's just much longer, so you don't expect like free-flowing up and down action. You don't expect like the big expansion and big contraction. You just expect steady prints. So the fact that it's moved up to a high over here in this 60 to 70% range and then has just sat in that range for a couple months, that makes sense. Okay, that makes sense to me. All right, one more chart. This is the just advanced decline line. It's the day-to-day prints of the advanced decline line. It is the ratio of advancers to decliners. So anything above 1 means that there are more advancers. Anything below 1 means decliners have the advantage. Very muted over here. No big prints. In fact, this entire year, here's January. In fact, this entire year, they're really, other than there's 2 days over here where you get a high print, but otherwise there are no high prints. It's a little bit indicative of over here where we had no high prints as the market moved up here. I'm just noting it because typically, over here, markets was in a downtrend and then it starts moving up. So you get these high prints. Market moved sideways and then moved up here. So you get some high prints in here. But right now things are just very muted. Like the advancers are mostly outnumbering decliners, but they're not outnumbering decliners on any given day. They're very, very rarely outnumbering decliners by very much. Okay, so overall, the indexes continue to trend higher. Breadth would suggest that the bulls have a slight advantage over the bulls. It's not a strong advantage, just a slight advantage. And somehow, some way, there seems to be this perfect handoff of every time a stock hits a 52-week high, or a 1 month high or 3 month high, there's an equal and opposite number of stocks doing a 1 or 3 month low. For every stock getting above its 20 or 50-day moving average, there's an equal number of stocks going below. And it seems like this perfect handoff from one to another. The math works great. It's just odd that it would play out so perfectly in reality. So I don't know how to read this. I know the market's doing well overall, probably due for some sort of correction. All I can say is maintain a bullish bias, but have stops in place. It's always the case, have stops in place. And then when things happen that don't entirely add up or make sense, then you have to be extra cautious to make sure you have stops in place. All right. Hopefully you got something out of this, even though I'm not even sure what to read from it, but that it in itself is an indicator. So sometimes the signals are not clear. All right. We'll see you next time.